Let's go over crude oil. We had a nice trade this morning. Remember, we are futures traders. We are not stock traders. So you want to log in no later than 7:30, latest 7:45 in the morning. You typically are going to get some nice trades right before 9 o'clock. And typically 3 out of 5 trading days, you're done by 9 a.m. in the morning, meaning get in here, log in here at 7:30, latest 7:45, and some trades are going to start firing off. I had a beautiful trade that fired off this morning right here just before 7:50 this morning. Let's go over it real quick. We have 2 back-to-back sell signals, one just before 7 o'clock and one with market profile, market delta that just happened on this last trade setup. First of all, let's establish what we do in the room, and then we're going to go over gold. We have unemployment claims coming out in 10 minutes. Gold's having a nice little rebound off the LVA also right now, but let's go ahead and look at crude oil. The methodology states this. Look at the trend filter. Trend filter is down. We are in a downtrend in crude oil, downtrend. The methodology is very simple. We let market profile set the trade up. So the first thing you do, you grab a cup of coffee, grab a cup of tea, whatever you drink in the morning, sit down at your trading desk. You look at crude oil and you say, okay, am I trending down? Am I trending up? Or am I flat as a pancake? Flat in a range market. The market can go vertical or it's going to go sideways. That's all it does. Every single day, vertical or sideways. We're vertical down right now. Trend is down right here. Longer MA on the trend filters down. So what we want to do then is we want to sell high value area, red, within 2 ticks with negative market delta, or break retest control point or LVA. We do not buy low value area in a downtrend, right? We're more educated than that on market profile. We know better. That's for novice traders that do not understand how to trade market profile. We do not buy low value area. And just like I said, like Adam said yesterday, I said we would turn into a trend day yesterday at 8:15 in the morning. I said, look for a trend day tomorrow because we were in chop. Sure enough, we get an easy trade this morning to start us off really with 2 back-to-back nice trades. Let's go over this one on the break retest first, and then I want to go over gold with unemployment claims coming up. If we're in a downtrend, we either sell red, high value area, or let LVA break or control point break in the retest within 2 ticks, negative market delta. Check how easy this trade was. This is a no-brainer trade. You break through low value area because we're not allowed to buy low value. Not allowed to buy it. You break actually down through LVA a little bit too. You come back up through LVA into the control point within 2 ticks. It was all positive market delta popping us back up. You pop this back up with positive market delta. Right here, here's negative market delta all the way down through. You can see negative market delta. Look at market delta right here. All sell side bias. There's our retracement after it broke through the LVA and also broke through right here. You broke through your LVA. Then it retested. Right here is my control point. Right at it. It touched it right almost to the exact tick. That's what our market profile does. Right there it is resting right over here. Right there. There's 1 tick above it right there within 2 ticks. Then what you're going to do is you're going to wait for a negative market delta. There is your negative market delta, negative 153. You open your position up, open it up, open your position up right at the close of this bar. You have a hard catastrophic stop of 15 ticks. You adjust your stop 2 ticks above the swing high. Once you enter at the close of the red market delta, your stop is now 2 ticks above this, which comes out to an average of a 12-tick stop. Your target is the opposite side of market profile. You can scale with symmetry dots. It goes all the way down to low value area down here. There it is. It went from control point, all the way to low value area for a nice, easy trade, and it was fast. Okay, that is a break, retest, control LVA within 2 ticks, negative market delta. It just does not get any easier and simpler than that. You cannot miss those trades on trend days. I told you with market profile, trend days, it's like so easy to see the trade setups. I don't care if you have 60 years of trading in the market. I don't care if you've never traded in your entire life. You cannot miss trades like that. Very simple. Trend hard down, break LVA, control, retest within 2 ticks. It never even gave you an opportunity to think about taking anything else but this short. That's how you combine market delta with market profile resistance on a break retest. All right. Now, if I go to the trade earlier, we had another trade. For you earlier morning traders, some of you log in here at 6:30. I see a lot of you guys trading at 6:30. It's fine. Check this little guy out. Look at how do I educate you guys on the white chart, the J signal chart over here? What do I tell you guys? We do not trade this white chart unless we break through low value area, developing profile, or high value. We got to break below it and then get a retracement, or break inside of it and get a retracement, and we cannot exceed this black line. It breaks below it. It retraces with trend. Remember, trend filters down. And look at my Fibonacci dots that start firing. Here they start firing on the retracement, the Fibonacci dots. Green, buy pressure, buy pressure. Fibonacci dots are fine, buy pressure, buy pressure. Boom. Nails the exact high, negative 214, which is a huge sell imbalance. 244, I'm sorry. So you open the position up at the close of this red spinning top. Right there, the red close. Your stop loss is a hard 15 catastrophic stop going into it. You adjust your stop 2 ticks above the swing high, which gives you a $120 average risk for one contract. And you just sold the market right up here at 80, 46.80. So that was over a $400 trade per one contract. $400 trade off the first one for one contract potential. And it nailed the exact high. This one was a $200 trade per one contract. And it nailed the exact high right off profile. They were both profile based. You have to understand my methodology. We do not trade in this trading room unless we are on profile, period. If trend is down, we sell retracements. If trend is up, we buy retracements. That's how it's worked since 1985. The same exact setup has worked for 31 years for those that know how to trade market profile. Stop reading all these books out there that tell you how to trade market profile. We had a young lady, I keep telling my members in the room, that traded market profile, educated institutional traders for 13 years how to trade market profile. A young lady actually educated hedge funds, mini props. And I told her, you're doing market profile wrong. You're teaching these institutions the wrong way how to trade profile. You don't buy low value area in a downtrend. You're going to have more success by letting it break through and letting it retest. Guess how she educates the hedgies and the prop firms today? She educates them the way I taught her because it's more accurate. It's worked for 31 years. It hasn't changed. It breaks. You don't buy low value area in a downtrend. You got to be more educated than your trading opponent. You got to be more educated than some of these algorithms out there. You want to trade right with Goldman Sachs, their algorithm, not against them. So if you're going to trade with their algorithm, you need to let low value area break. You know, let it retest. Market profile is the footprint of the market. You don't need any, there's no holy grail indicator out there. Why do you think NinjaTrader gives you tons of indicators for free when you sign up for NinjaTrader? Why do you think TradeStation gives you almost 1,000 indicators for free? They don't work. None of them works on a daily basis. Every indicator works once, remember that, but they don't work on a consistent basis. Market profile is volume based, is price based. All you need to understand is order flow, volume, and price, and you are golden as a trader. This black chart will tell you volume and price. This white chart will tell you developing profile. So if I trade off the black chart, I know the footprint of the market on any market that I trade. It doesn't matter what it is. On this white chart, I know the developing profile no matter what market I trade. And that puts you ahead of your trading opponents and puts you on an equal standing with these algorithms that control the market. Floor traders do not control the market. Don't be novice in thinking floor traders control the market. It's all electronic trading. We got members in this room that are ex-floor traders. One was an S&P 500 trader, S&P trader for what, 12, 13 years, right, Tom? It doesn't work this way no more. It's all electronic trading. The ES is almost 85% of the volume now, not the standard contract. Floor traders have no pull. It will be obsolete. Floor traders will be obsolete soon. Electronic trading, they leave the footprint for us. So trade volume and price. You learn how to do this, you have an edge over all trading opponents. I don't care what your neighbor does. I don't care what anybody else has. There's no holy grail indicator. Nothing beats order flow. Nothing. Nothing else out there. So what we got to do then, we have to do this. Here's our 2 trades this morning so far. We'll go over the next one coming up. Here's our 2 trades. It's 2 for 2 this morning, right? Off of market profile. Some days we'll come in, we won't have one loser. Gold yesterday, we were 6 for 6. 6 trades in a row. 6 in a row. That's how accurate it was on market profile. Now, if we look what's happening right now on unemployment claims, they just released. All right? And what do we have? A corrective wave and shot straight up to the symmetry dots again off the unemployment claims. I told you gold will move with unemployment claims. J signal popped inside a low value area. We got a positive market delta. Gerald, go over to gold real quick. And what did I tell you on gold yesterday? I said any imbalance of over 50 on gold is a huge buy imbalance. What do we have right here after the news? It doesn't take the smartest bear in the woods to realize that's a big buy imbalance on a corrective wave. 53. That just gave you a nice $200 trade potential on gold. Now we'll look for another corrective wave coming up, which I'll go over in a second. Gerald, go back to crude. So gold just fired off a nice trade on a corrective. It's almost like a motive with the trend of the five minute too. So my point is this. What we want to do is let market profile set the trade up. We want market delta to pop us in. Now, right before I shut this video off, if this trade is going to be wrong, this last setup, either one of them, if the next bar after turning red, here was the exact entry on our first setup off of J signal. J signal broke through LVA retest. We have another one coming up again here in a second. If either one of these, the second bar would have closed green, you take a small loss. That's what separates us from all these traders that have all these other indicators. We know how to lower risk because we know when we're wrong. And if this is going to change market delta right at the second bar and change to a positive market delta, we take a small loss. Okay? That's how members in this room do very, very well. All right? You let market profile set the trade up between this black chart and J signal chart. And then you let market delta pull you in with negative profile and a downtrend or positive profile and uptrend. And if the second bar, now listen, second bar turns positive market delta, this one or this one, take a small loss. Professional traders know when to take a small loss. Novice traders keep averaging in, averaging down, trading off moving averages, lagging indicators like the moving average, convergence, divergence. Let them do it, because or they counter trend trade all the time, or they try to scout. Let them do it. If they want to keep throwing their money away and keep adding money into their account, that's nothing we can do about it. We're going to be professional traders, though. We're going to trade off the footprint of the market. We're going to trade off the order flow of the market. That's what separates us, and that's what is going to help increase your profit and loss statement. It doesn't matter about your percentage wins and losses, guys and gals. It matters about your profit and loss statement. Are you consistently increasing your profit and loss statement? Market profile gives you the edge in doing that. I've never seen any other indicator, and I've traded hundreds if not thousands of traders, and every indicator they have brought to me, or I've trained actually in my business beside me when I used to train one-on-one, I've never seen one indicator, and I've worked with thousands of traders. I've never seen one indicator beat market profile. Not one. Not one. So don't think you have the special indicator, the Holy Grail. No one sells a Holy Grail. It doesn't exist in the market. You do not have a Holy Grail. It's not possible. Or I would know about it, right? Or you would know about it. The only thing we can do is we have to put high probability trades on the books. And when we get stopped out, we have to contain risk. That's all we can do as traders. And then the hardest part about trading is, how do we let the runner run? We have to let the runner run. We do that, we're good to go. We use that with my symmetry dots over here. So look at my symmetry dots. If you look on this last setup, here's a setup, $4 trade. We can scale here. If you got short 6 contracts, you scale 50% right there. You scale another 75% at my second set of symmetry dots down here. And if you want to be conservative, just get the opposite side of market profile. You can use my symmetry dots to reduce risk after you get in. All right, don't make this difficult. These two charts set it up. This pulls you in and lets you contain risk. Look how beautiful this market delta is today. Beautiful, beautiful. Now here's a retracement. Now we got another possible setup coming up on a second test trade. All right, I'll go over that in a second.